Have you ever felt that nagging worry in the back of your mind, the one that whispers, "Am I really compliant?" For business owners, that whisper can quickly turn into a shout when faced with the labyrinthine world of state and federal regulations. It's not just about avoiding fines and penalties, although those can be crippling. It's about building a solid foundation for your business, earning trust, and setting yourself up for long-term success. Think about it. Every state has its own unique set of rules, from annual report filings and registered agent requirements to specific licenses and permits. And if you operate in multiple states, that complexity multiplies exponentially. It's enough to make even the most seasoned entrepreneur feel overwhelmed. The truth is, staying on top of all these moving parts is a full-time job in itself, a job that most business owners simply don't have the time or expertise to tackle effectively. That's where a trusted partner like CorpNet comes in. Today, we're diving deep into the world of state compliance, and more specifically, how CorpNet's state compliance checklist can be your secret weapon in navigating this often confusing landscape. We're not just talking about ticking boxes. We're talking about peace of mind, operational efficiency, and the freedom to focus on what you do best, growing your business. So let's break down what a state compliance checklist entails, why it's absolutely crucial for every business, and how CorpNet streamlines this entire process, turning a potential headache into a straightforward, manageable task. The perils of non-compliance. More than just fines. First, let's understand the stakes. What happens if you don't stay compliant? The immediate thought for most is financial penalties, and you're not wrong. Fines for late filings, lapsed licenses, or not having a registered agent can range from a few hundred to thousands of dollars, quickly eating into your profits. But it goes deeper than that. Non-compliance can lead to a loss of your business's good standing with the state. This might sound minor, but it has significant repercussions. Without good standing, you could lose the ability to transact business legally in that state. Imagine not being able to renew contracts, secure loans, or even defend yourself in a lawsuit because your business isn't recognized as legitimate. It can also open the door to personal liability for business debts, undoing the very protections an LLC or corporation is designed to provide. Then there's the administrative burden of remediation. If you fall out of compliance, getting back into good standing often involves more than just paying a fine. You might need to file multiple past due reports, pay reinstatement fees, and jump through additional hoops, all of which consume valuable time and resources that could be spent on your core business activities. And finally, perhaps the most insidious consequence: reputational damage. In today's interconnected world, news of a business falling out of compliance can spread quickly. This can erode trust with customers, partners, and investors, making it harder to attract new business and retain existing relationships. In essence, non-compliance isn't just a regulatory hiccup. It's a direct threat to your business's viability and future. Understanding the state compliance landscape. What are we even talking about? Now that we know why it's important, let's unpack what state compliance actually means for most businesses. While specifics vary, generally, it revolves around several key areas. Annual reports, or statements of information. Almost every state requires businesses to file an annual or biennial report. This keeps the state updated on your business's basic information, like its address, registered agent, and sometimes key officers or members. Miss this, and you're immediately on the state's bad side. Registered agent services. Every legally formed business entity, LLC, corporation, must have a registered agent in each state where it operates. This is a designated individual or company with a physical address in the state, available during business hours to receive official correspondence, service of process, legal documents like lawsuits, and important tax notices on your behalf. It's your business's official point of contact with the state. Business licenses and permits. This is a vast and often complex area. Depending on your industry, location, city, county, state, and type of business activity, you'll likely need various licenses and permits. This could range from a general business license to specific professional licenses, e.g., for contractors, real estate agents, or permits for health and safety, environmental impact, or selling certain goods. This is where many businesses trip up. as the requirements can be incredibly granular and specific. Payroll tax registration. If you have employees, you'll need to register with the state for payroll taxes, including state income tax withholding and unemployment insurance. Each state has its own system for this, and timely registration and reporting are crucial. Sales tax registration. Seller's permit. If you sell taxable goods or services, you'll likely need to register for a sales tax permit in the states where you conduct sales. This allows you to collect and remit sales tax to the appropriate state revenue department. Foreign qualification. This is a critical one for businesses expanding beyond their home state. If your business is formed in one state but wants to conduct business in another, you'll generally need to foreign qualify in that new state. This means registering your existing entity as a foreign entity, essentially getting permission to operate there legally. Skipping this can lead to severe penalties and an inability to enforce contracts. Beneficial Ownership Information (BOI) report. This is a relatively newer federal requirement under the Corporate Transparency Act, but it's crucial for state compliance too, as it impacts many businesses. Businesses now need to report information about their beneficial owners, individuals who directly or indirectly own or control 25% or more of the company, or who exercise substantial control, to the Financial Crimes Enforcement Network, FinCEN. While federal, its impact reverberates through the overall compliance framework. With that said, thanks for watching, and until next time.